Good afternoon. Great. So today I want to open a dialogue about a space commodities futures trading exchange. And in preparing this talk, I realized I was talking to non-finance people. So I'll go easy on you. Okay. I am many things. I'm a recovering Wall Street lawyer, a Hong Kong merchant banker, geospatial technology finance pioneer for the government, 9/11 responder, and Ashoka Fellow. Also, I have a neuromuscular condition called dystonia. My head will shake, but I assure you, as a lawyer in 3 states, California, New York, and Pennsylvania, if I disagree with you, you will know it. So, among the many things I am, I teach at Stanford, and I teach a bunch of courses, including sustainable banking, which is how, in an unlikely set of circumstances, I came here. I had a student who was researching building with regolith on the moon. And Henning said to me, "Bruce, what are you doing to help me bank in space?" And I said, I didn't know it was my problem. But he convinced me it could be, and it should be, and that he was worried that with the flatlining of government budgets for space, he was worried what would happen to promote science and technology and advanced investment. And so we wrote 2 papers about banking in space, and we thought that would answer all the questions, and it turned out it didn't. It raised the question of how, as a banker, I would see the supply and demand for space commodities. How would I know what to finance relative to other aspects, whether it's water, whether it's bandwidth, et cetera. So it seems like there's a whole area of space research relating to market formation and finance that is an open field for imagination. And when we look back at some of the roadmaps developed in the 1980s for human exploration, and we keep looking at them, and then we see the new versions, and we look at them, we sort of wonder, where's the money going to come from to persistently, continuously, seamlessly invent and build on inventions in space? And then this happened. The Exim Bank was out of business for a little bit, 2015, and we thought, geez, this is no way to run a commercial space economy. So what would a commodities exchange do to augment space finance? And here, let me make the proposal. Assume that you want a thriving space economy, and assume that to have that, you need to know who's going to buy whatever it is you're building. And they need to know who will buy what they are building, and so on and so forth, in places that we all want to get to, whether it's the moon or Mars or an asteroid or anywhere in between. So could we agree on standards for space commodities? Not because a banker said that there should be, but because you all, as the engineers, know it intuitively. The operation of the exchange would be as a private activity, much like the Chicago Board of Trade today operates, but it would operate under legal supervision. In other words, there would be adults in the room. Come on, it's the subprime crisis joke. And we do have something called the CFTC, the Commodities Futures Trading Commission. They know how to run or to regulate commodities markets, but it's important to explain that they do not know how to grade wheat or metal or anything else that trades, or even the financial derivatives of them, as I'll show you. They rely on a board of trade or a group of experts to make the market in that commodity, to define what is a meaningful commodity. They just provide some adults in the room. This would offer the federal establishment some huge economies of scale that they could know to buy a commodity such as water, such as bandwidth, et cetera, habitation, and that cost per utilization unit would be persistently lower, much like the Moore's Law. So we have some historical precedents for how to organize and operate commodities markets. And in a paper that I'm writing with Bruce Pittman and some others, I researched how far back do these commodities markets go. They go pretty far back. Whether it's rice in Japan or not wanting steel that sags to create the transcontinental railroad, we've been building using commodity markets for an awful long time. There are key functions that these exchanges provide. Most of all, they reduce the risk of forward production of an asset. So whether it's growing wheat and planting it today and knowing what the future yield would be once the harvest occurs, or anything else, they standardize that process. They also, these exchanges also create a huge transparency of data to see where the supply is too much and too little that can be now filled more seamlessly. Commodities markets help us basically play to our best advantage. Countries that can produce very high order goods, high value goods, can trade those goods for other countries who produce commodities that are subcomponents or are needed. So let's take a very simple example. You've got a wheat farmer, and the wheat farmer plays two roles. She, being politically correct, we're trained to do that at Stanford. She will earn profit from being a pure farmer, okay, from planting the seeds and harvesting. But increasingly, she, which is now an agribusiness, will earn profit by investing in wheat. And the reason she's comfortable doing that is because she's expert at forecasting market demand for wheat. And she wants to use that expertise in forecasting demand for wheat to not only plant the right type of wheat in the right conditions, but also to invest in commodity derivatives, such as futures contracts that hinge on building a supply of wheat for certain uses. At the end of the day, we have a large ecosystem that supplies us wheat for different purposes, and a financial derivative of that ecosystem that reduces the risk of supply and demand. Assume that we wanted a space commodity market. Could we use a similar template for that? I think we might be able to. And in this case, you have space companies. They're used to supplying a physical good, including transportation as a physical good, or mining services as a physical good. And they also could open up the opportunity for a set of financial derivatives. I don't have time now to go into the difference between futures and forward contracts and options and swaps, but assume all of those types of contracts enforceable by an exchange would allow for different players to come into the industry. Specifically, those who want to know that they have a continuity of supply, they would be the counterparty from the space company to know that they have launch services. We see some of that today, but it's not organized on an exchange. It's very ad hoc. The ad hoc nature of that makes it difficult to buy insurance at a cheaper price. Insurance is one of the services that a commodities market can provide in the sense of not insuring the commodity, but allowing for a derivative to take weather risk, to take technological and other risks. So what you see here is the opportunity for adding a new set of investors to space. Investors who want to, let's say, relying on the new market transparency, be an investor in a basket of space assets, not just one company's vision of an asset in a certain orbit, but a whole range of them. You know these to be mutual funds or other types of investments that you make, but we could construct indexes of the traditional manifest of services that any of us would want when we launch into space. You could have folks who are, investors, investing in much more of the vision of space exploration than one company at a time. They wouldn't be investing in the space economy this way. Still, there would be equity investments in companies. Still, there would be loans to those companies. And then finally, insurers, folks who like to buy risk once it's quantified, once it's standardized, they can use this commodities market to add the liquidity that they can exchange their asset or their bet with someone else who wants to buy it out. So, as we know, lunar explorers are going to want some water. They're going to be thirsty. And I think if we want water to be available for exploration by all humankind or some of the other commodities that are needed to be a spacefaring species, we're going to have to organize the commodities market that serves that purpose so no one monopolizes those commodities. So they are available at a fair price, which is, again, a function of the exchange, and they are available to all on an egalitarian basis. So what happens without an exchange? Spice, right? I've waited 20 years to do that. I can do Harkonnen too, but no. The spice, we don't want to fight over these resources. There's another proposal that we have in terms of how to have the mutual aid pact to enforce these rights in situ. But for this purpose, if we don't have a commodities exchange or something equivalent to it, then the question of who gets the resource and how much they can charge for it, to whom needs it, where it is, becomes very, very problematic. Let's not export our potential for fighting wars to another place. We already have enough opportunity here on this planet. Anyway, demand side problems we've heard about from Steve Jurvetson and some of the other speakers. A commodities market lets you see dynamically who wants what commodity where, at what price, and when. 2 years from now, 5 years from now? That helps with understanding what the demand curve is. And coming back to where I started in this journey, as a banker lending to someone to produce these assets, I really want to know who the customer ultimately will be. Having forward contracts from those customers or those customers' derivative entities would really help. This gamifies what it means to have a space economy in a way that we don't have right now. We can't see a big, board of trades on all the space economy, commodities. We need that. Anyway, I think this reimagines and ups the game for what the space economy could be or might be. It is the concept of a space commodities futures trading exchange that's privately led, sits alongside of all of your other advances, and may actually make some money available to you from different sources than you have today. Thank you.
Thank you very much, Bruce. As I mentioned, next up we're going to have Lisa Kuo moderating the panel discussion about the same topic.
I guess I will sit over there. And you guys can sit wherever you like. But depending on where you sit, all right, everybody has a microphone, or at least have access to a microphone? There's one over there, there's two over there, and you guys can share. Okay, awesome. Thank you so much, Bruce, for the really insightful and really enlightening presentation. I have to admit that I am an engineer by training, so space commodity, especially like a future exchange trading market, is a completely brand new concept to me, and really appreciate all that proposal. Let's see, I think we're gonna start with the introduction of our panel. So do you wanna start with, we'll start from there. So Bruce already did that, so Joe?
Hello. Hi, I'm Joe Landon. I'm the chairman of Space Angels. And my background is in aerospace engineering. And I worked at Boeing, I think the same place Lisa did at one point, building big communication satellites. Then went on to work in the space tourism industry and was one of the early team members at Planetary Resources as well. And now I chair Space Angels Network, and we're the largest space investing organization in the world. Have invested in dozens of companies and looking for more.
Hi, I'm Bruce Pittman. I'm the chief system engineer in the Space Portal office at NASA Ames, and a longtime believer in the potential of space. As I've told many people, I've been pushing this rock up this hill for about 40 years now, so I'm glad to see we're finally getting towards the top of the hill. At least I sure hope so. I may be wrong, but if I'm not right, I'm at least delusional. So one of the things that we try to do in our office is we try to help this process by looking for opportunities for government, industry, and academia to work together better. And one of the tools that we've found that's very effective is this idea of public-private partnerships. So we've done our best to advocate for that in a number of different environments, starting with the COTS program that Dennis talked about this morning, and kind of looking at extensions of that. We're all looking at the ISS utilization and microgravity applications there. I think that we're not that far, and again, keep your fingers crossed, I think we're not that far away from seeing the ability to manufacture things in space profitably, where you can take something from the Earth or mine it in situ, add value to it, and sell it for a profit. So I think that we're close, and that's where this commodities thing comes in, because if you could stabilize supply and demand and so that you could forecast what the potential would be, I think that would be a great benefit to the development of such an economy, and that's why I've been working with Bruce on this concept for the last about a year now, and finally that there is a role for, the science is great, the technology is great, but to make something truly sustainable, I believe that it also has to be economically viable, and one of the greatest ways to make that happen is to make a profit. So I think this commodities exchange we're talking about could help with that, and I look forward to the discussion.
Hi, my name is Bill Miller. I'm the CEO of Deep Space Industries, and we are an asteroid mining company. We've been around for about 5 years. We spent 5 years and millions of dollars developing the science, the technology, the legal and regulatory framework, and the business plan to move this concept forward. We plan to launch a mission to an asteroid in about 3 years. One of the big problems with materials in space is that it's obviously very expensive. I think on the order of $10 million per metric ton of water a day. I know that price is going down, but what we would like to do, and you've heard a lot of people talk today about Moore's Law and how it applies to electronics. And what we think that is important for the space economy is that you bring Moore's Law to raw materials. And we classify this as smart atoms versus dumb atoms. So our feeling is that it's really important that you concentrate on launching smart atoms, smart machines, and so forth, but you actually produce the dumb atoms in space. And if you look at structures in space, whether it's solar panels or cislunar habitats or whatever, our estimates are that it's somewhere around 10 to 1 dumb atoms versus smart atoms. And if you look at rockets, so they're 90% fuel, maybe more than 90% fuel, they're obviously also 10 to 1. So what we have to do is we have to use this, apply Moore's Law to these dumb atoms. And how do you do that? The way you do that is you launch smart machines that'll make dumb atoms. And we have to rethink those smart machines. So at DSI, we're looking at building a whole new class of spacecraft. You've seen the revolution in low Earth orbit with how the electronics, the small electronics and so forth, and the capabilities have increased, the sizes have gone down. We'd like to take that paradigm to deep space missions, well, even LEO and heliocentric orbits, things like that. But out of, beyond just taking that methodology and those technologies and applying them to satellites, we actually want to apply those technologies to spacecraft. And we think that'll bring the cost of these resources down to where they can be much more cost effective than they are by launching them out of Earth's gravity well. It's a challenge. There's, as I mentioned, there's challenges on the technical side. There's challenges on the business side. There's challenges on the regulatory side. Even the planetary science can be challenging. So we put a team together. Our satellite team has 20 satellites, successful missions in orbit right now, no failures. We have one of the world's most well-known planetary scientists. He specializes in asteroids. We have a legal and regulatory person who's one of the premier people on space law in the world. So it's a very challenging environment, very costly environment, and the time frames are uncertain. So this panel is a great opportunity, I think, for us because obviously we're looking for capital. We actually have a business plan where we actually sell our technology we develop for deep space missions. We sell that today. For instance, we're selling tens of millions of dollars of propulsion systems that we originally developed for our asteroid mining spacecraft. That uses water for its propulsion, which can be extracted from an asteroid and refueled. So that's an example of moving forward. But the commercial side of our business is great. The capital side is great. But I think something like Bruce proposed here could be the thing that really makes this take off quickly.
Good afternoon, everyone. My name is Ian Christensen. I am a project manager with the Secure World Foundation. We are a nonprofit organization that works on cooperative policy dialogues around the central issue of space sustainability. Essentially, how do we operate in and continue to benefit from the orbital environment, including the applications that environment provides us here on the planet's surface. So as part of that, we look at the underlying frameworks that enable this community to work together as an ecosystem, be they policy and legal frameworks, be they industry cooperation frameworks, or be they larger discussions around transparency and confidence building measures in various different aspects of the space sector. So definitely an interest in a sustainable space economy over the long term. Just personal note, my background is in policy and in a career in strategic and business consulting prior to joining the Secure World Foundation. So.
Awesome. Thank you very much. So let's jump right in. Let's start with the first question that it's been like itching the whole entire time. Again, whenever I think about a sustainable space economy, I always think about supply and demand, right? So now we have two companies that are going to be doing the supply for us, but I would like to understand where's the demand? So can we start with maybe Bill and Joe?
Sure. I think the demand is going to come about at the end of the day as a result of a stable supply. I mean, it's very difficult. And look, I think that Steve brought up earlier today, or someone did, about United Launch Alliance, I think it was from NASA, about United Launch Alliance agreeing to buy fuel in space. That's a great thing. But I really think that a stable supply is going to be very important to create the kind of ecosystem that you need. And to do that, it's going to be capital markets, but possibly this futures exchange also.
Yeah, I agree. I think when it comes to demand for materials or commodities or stuff in space, I think this is one of the things. It's always been there. I think the demand is there. There's billions of dollars of fuel that is consumed in space now, used in those satellites that we used to build, and such a high percentage of the mass of a satellite and such a large driver of the design is based on how much fuel it can carry. So I think the demand for at least a fuel commodity in space is there, and it's been there for 30 years. I think the other thing that I'm really hopeful about and excited about are hearing people like Elon Musk and Jeff Bezos lay out their vision for the future. And if you look at both their visions, it involves lots of people, millions of people in space, whether they're on their way to Mars or they're around Earth orbit. I think that is a huge driver of demand for all kinds of stuff that we're going to need to get from space. It makes sense to get from space. I like the analogy of smart atoms to dumb atoms. It's smart. Yeah.
NASA?
Yeah, so I guess I'd look at it a little bit differently. If you kind of go back and look at history, I've been saying this for a number of years, and I definitely think it's more true. The reason everything seems kind of chaotic right now is this is what a paradigm shift looks like from the inside. It's kind of messy, it's kind of ugly, and a lot of people are freaking out about what's going on because the rules to the game are changing. So if you kind of go back and you look at like Clayton Christensen's book, The Innovator's Dilemma, I mean, he basically talks about this. When one of the problems that we've had in the space industry is that we were too successful too quickly. If you go back to the Apollo program, and then what became a way to do things became the way to do things, and it was really hard to innovate around that because you had so much invested in the status quo that it was easier to just keep doing what you'd always been doing, even if it was expensive. It worked, and you got results. Well, but then somebody comes along and says, well, I can do it better. Well, if you had to go back to the folks that controlled everything and ask their permission, then the answer is usually, well, no, we don't want to do that. But if these people were audacious enough to come to the table with their own money, and they said, well, I'm going to try it anyway, and son of a gun if it didn't work, as we saw last weekend with SpaceX, launching 2 spacecraft and recovering both first stages 49 hours and 15 minutes apart, which is pretty spectacular. So I think that's the really exciting thing right now, is that the rules of the game are changing. So to Bill's point, if there was a supply available, so I think as soon as somebody can do that, they can say, I've got this available. And I think there is a role for the government to play here. What exactly that role is and how they choose to exercise it is kind of up to the administration and up to the Congress. But I think historically the government has played a role in these kinds of things, and I think that's possible in the future.
Ian?
So, little story here. When I was thinking about the preparation for this panel over the last week, one of my advisory committee members came into the office with a box of old textbooks, and in that box of old textbooks was one on space economics from 1984, 1986, somewhere in that realm. And I paged through it, and there was a section on space resources. There's a section on on-orbit servicing. There's a section on in-space manufacturing. And so 30 years future, we're still talking about those things, but we're talking about them in a different way. We're talking about them in a practical way, in an executable way, in an investable way. And when I think back on that, what I think is different is that we look at it more of an ecosystem, and we understand how those different pieces fit together. So an element like a commodities exchange would support that, an element of some of the discussions that we're having at the regulatory level about a commercial space regulatory approach at a holistic level support that. So I think that's kind of the change that we're seeing now.
So I just want to acknowledge, without a bi-weekly talking partner like Bruce, I don't think somebody like me could understand you all to the degree that I tried to. And there's a need for, as space and space economy becomes an asset type to be invested in, there are going to be more aliens like me showing up in your rooms. And we don't know, we don't know what you do or how you think, but we do know how markets behave, and we do know how to make financial bets on various markets behaving a certain way. What we've called for in this proposal is the notion of what is the demand, to Bill's point, for the first time actually having a pretty good sense globally of the demand in real time. At what point in the future, for what service, to go from where to where, or to appear with that commodity on the moon or Mars. So that visualization of market function is something that I think is profoundly enabling for you all to hit the target, to not undersupply or oversupply, to not be meek, to Bruce's point, in how you frame what you want to produce or who would buy it, but to actually have the benefit either being the contract counterparty or betting on an index of contracts that are being traded for a similar set of commodities.
I think Bruce made an interesting point, and I want to talk about just investment over time. And when you have a new industry like asteroid mining, for instance,
Sure.
Typically the people that invest early on are visionaries, high net worth individuals.
Yep.
Then come the venture capital firms, then come the mass market.
Yep.
So I guess I have a question for you, and that is, someone like, it seems to me like Luxembourg, for example. They're banking, space resources. They would be a perfect entity to do something along these lines. They're very forward-thinking. But what is the timing, do you think, on a commodities market for something like this, where the supply is at risk? Because I can't tell you whether I'm going to supply it in 5, 6, or 7, or 10 years. And how does that affect? Does that affect the price of the?
It is a technological risk. It's an insurance risk, but it's also a market risk. And so I think we can digest those separately as derivatives. The power of Luxembourg to set up a commodities exchange, I'm sure with a few more conversations we can manage that if we want. But the reason we could do it either in Lux or as importantly here in the States is that we already have commodities markets. And those regulators, frankly, don't care if it's wheat or asteroid mining. That's not their specialization. Their specialization is stabilizing how the market for those things work. And so that's a huge asset that could be brought into this industry, that you're not searching for the technology of how commodities markets can be regulated.
All right. So thanks for that round of questions. The second question that I have is, of course, we already talked about the demand and supply, but, in a really healthy and vibrant, sustaining market, you also need the whole entire value chain, the supply chain, the adjacent market, and all of the other entities and infrastructure that makes a market sustainable, right? So I believe that, of course, we have NewSpace and Planet Resources here, but there's got to be other supply chain or other value chain that is sorely missing. What do you guys think is missing, or do you guys actually think we have a relatively healthy value chain that's set up?
I'll start on that. So I think for space resources, I think everything is missing at this point, because there's nothing, right? There's, I don't want to be cynical, but we need it all. And I think if you look back at the development of other industries and even other space industries, the filling in the value chain, the supply chain, companies tend to be vertically integrated for the first many years. You see that with SpaceX, and I think it's probably going to follow the same pattern. Would be my prediction. Where if you need something, you've got to build it yourself. The chances of having supply chain or other components, pieces of the puzzle out there and available in a commodity market of their own is highly unlikely. But you can, by having vertical integration first, where companies do everything themselves, then other companies and entrepreneurs can look and say, okay, well, I see Deep Space Industries doing this, and it doesn't make sense for them to do that. I can do that better. So I think that we'll start to see the lower value elements of that chain start to split off into sort of less integration, less vertical integration. I don't know what you think about that, Bill.
I agree with that, but I also think there's on the supply side, supply chain idea. I don't know whether this fits in exactly or not, but you also have standardization and regulatory issues to deal with. Right now, if I was able to supply ULA with liquid hydrogen and liquid oxygen, what adapter would I use? What would the quality be? If they wanted to buy water in space, do we have a definition of what that is, how good it has to be? So there's all kinds of issues just on the standardization and the regulatory side that I think impact things also. That is missing today, although the regulatory we're making progress in the US, the UN, and around the world. The standardization side has not happened yet. I think that will happen as the supply becomes more stable.
But I think that's also, I mean, it's a problem and it's a challenge, but it's also an opportunity. I participated, started about 10 years ago. We started a thing called the Space Investment Summit Series. And we were starting to go around and try to educate the venture capital community on this thing called, NewSpace or commercial space. And to convince them that it wasn't necessarily time to write checks, but it was time to start paying attention to this new emerging market. And one of the things that was interesting, and again, this is something that perspective has shown me over the decades, is 30 years ago, if you were going to talk about any kind of space company, it was step one is raise $1 billion or more. 2 was build a big rocket. And the neat thing about today's environment is you don't need to do step 1 and step 2. Some other people have built the big rockets and all that, and the price is coming down. And 2, it doesn't take $1 billion or even in some cases even $1 million to do that in some of the CubeSat and things that have been enabled. So the barriers to entry are dramatically lower. So the challenge that I would put for you would-be entrepreneurs out there is look at this ecosystem and where's the niches, where's the cracks that nobody is in, where you can add value for a relatively low investment, and then go to the people further up the food chain and offer a value proposition to them of what you can do for them. And it really helps if you've got something demonstrable there that you can show them rather than just show them some view graphs and everything about what you're doing. But I think this is a real era of opportunity to go into these areas that really aren't being fulfilled. To Joe's point, the things that aren't happening now, that's an entrepreneurial dream.
So, I just love that you all have agreed in some ways to standardize how the water can be used on the moon, because that's one of those commodity questions that we hadn't. But, Bill, to your point, I think it's only last year that the medical profession agreed to a standard medical kit that would fly on every spacecraft. We've been in space flight for a few decades, and right now, there will be a standard kit that can save some other, astronaut. So I think there's a forcing function that market dynamics will make those standards worthwhile pursuing. Obviously, the government, as both the procurement arm, standardizing on some of those definitions, but also, needing some special activity to be an economy of scale. In the proposal that we made, we talked about if a commodity is traded on a commodities exchange, then that would be per se prima facie evidence that it is commercially feasible to make that commodity available. So, there's a virtuous cycle of defining it so it can trade and then fulfilling that trade as a supply loop.
Thank you. Can I just check on how we're doing on time? I can't see anything. All right, can somebody remind me when we're 10 minutes away? Okay, thanks. All right, so let me get back to the really interesting point. Actually, did you, I guess, have any more comments? Sorry, I might have interrupted you. An interesting point that Bruce Pittman was talking about, that his call for entrepreneurs to come in and offer a value position. So the fact that there is no sustained market, if you will, and there's plenty of opportunity, but there is no sustained market, is it attractive, or is it not so attractive to investors to come in and do all of these things? Sure.
I think it would be more attractive with a futures exchange or something along those lines. I mean, the beauty of the futures exchange is that you can invest in a sector without investing in a company, and there may be less risk if you can bring insurance into the puzzle also. Having said that, I mean, we're in the middle of our third round of investment. I know PRI has been very successful with investment, but you are going down that value chain of high net worth individuals to VCs to the broader market. But to your point, it's no longer $1 billion. I mean, we're talking about, in fact, one of our strategies is designed the smallest possible thing that can go into space because it reduces your risk. And with the miniaturization of technology and propulsion systems and so forth, that's feasible now. So it's become less of an issue. But as you get further into this process and you start making massive quantities of material in space, the capital requirement is going to change. And at that point in time, I think it becomes more difficult to just find capital in the open market.
Right. And
So I'd take us back to and again, this is both the threat and the opportunity of emerging markets. How quickly will it emerge? If you build it, will they come? And will they come before you go bankrupt? This is the challenge of an emerging market. But again, if we go back and take our time machine and go back 100 years, if we were sitting here in 1917 talking about, you've heard this thing about this airplane thing? You think there's really anything to that? They're kind of rickety and all that. And if you had told those people sitting on this panel in 1917 that within 30 to 40 years that there would be a worldwide market in air transport, and that the number one thing other than people that you would be transporting between continents economically was fruits and vegetables and cut flowers, and that was a major market, they would have told you were nuts. And I think we're on that same verge here in space, that commodities mining, asteroids mining the moon sounds crazy today, but all that takes to make that economical is energy. So if you can find a new way to provide that energy, however you choose to do it, and we've all got our favorites, but if you can crack that problem, then you can crack the economics, and things that wouldn't have been at all feasible, in any kind of economical or venture kind of thing could all of a sudden become commonplace. Oh yeah, we knew that all along. And a more recent one is 25 years ago, if we were sitting here talking about the internet. Have you heard of that internet thing? You think there's any money to be made there? And how many hundreds of billions, trillions of dollars have been made that? And 25 years ago, it was not clear that there was any money to be made there. So that's both the joy and the tragedy of emerging markets.
So I'm sorry, Ian, just to complete the thought, in the space papers, if you look them up, you'll see a definition of something that we called a USC, a unit of space convenience. Being from Stanford, a USC acronym was a little hard for me, but it was okay, worked out okay. And so a unit of space convenience is exactly what we've been talking about. Is it 1/6 the gravity on the moon to go someplace else? versus going from launching from Earth, that USC value is tradable. That's something I, as a banker, can standardize on and can translate any commodity's ultimate value into what does it allow in terms of USC units. So you know, what Bruce is talking about in terms of a new way of thinking about economics in space, this is the kind of research and I think exploration we also need to do. Sorry.
No worries. So, Bruce P., you mentioned Clayton Christensen earlier in your remarks, and disruptive innovators, and what a disruptive innovation is. And a key aspect of that, if you're a disruptive innovator, is you're able to enter the market at a lower cost point, right, and expand the number of customers that you're accessing, right? So that's something that we see in a lot of the aspects of the space industry right now are very classical disruptive innovators. This panel, we're looking at in-space economies primarily, but if we step back and reflect on what Steve Jurvetson was talking about this morning with Planet's experience and some of the things going on in the Earth observation sector, the remote sensing sector of our business, they are very actively expanding the users of that data and essentially increasingly treating remotely sensed data as a commodity itself, right? So just curious, Bruce, see if you've looked at that market sector, see if there's any analogs or experience that we can bring into the in-space economy question.
Go. Yeah, I mean, I think that we're on the cusp of redefining economics. While we're doing propulsion, let's do economics at the same time. Because ubiquitous access, abundance of access to that commodity, to that USC will be existential. I mean, a lot of Hollywood movies could be made with that. And how we steward the economic principles for the physical assets that you create is, I hope, as much, and I think by knowing you all on the panel, it's part of us to set up that economic now, you know, that equal access opportunity.
But I think one of the things we need to look at here is this idea of a virtuous cycle. One of the new elements that's played into the game, and we saw it, you know, over the weekend, was this whole issue of reusability. Even though it's only partial reusability now, you've got two, you know, main players in this game that are looking in the next 5 to 7 years at fully reusable vehicles. And that is a piece of the puzzle, but it's not an end in itself, because the key to making money with reusable vehicles is you need to fly a lot. Flight rate is the number one parameter, and there have been papers written on that. My boss wrote a really seminal paper on this about 10 or 15 years ago on this topic. So what you need to do, and then as you fly more, then things get cheaper, and as the flights get cheaper, then people can afford to do things that they couldn't afford to do things, and now you get more flights, and then when you get more flights, things get cheaper. So that's the virtuous cycle. So things that may not be economically viable right now could be, and so it's like, and there is some risk in this, you know, but the key to entrepreneurship is, if you look at the literal dictionary definition, it's one who takes the risks of business. Mm-hmm. And so there is some risk in this. If you're not comfortable with risk, you know, this is not really the game for you. You know, it is a risky business. And I, for one, have probably started 10. And I think I made money out of 3 of the 10, and that's not a bad average, you know, here. But I mean, I had some spectacular failures, you know, just biblical, and it's a humbling and learning experience. And some of it was great idea, at least I thought so, well executed, but the timing just sucked. And if you choose the wrong time frame to bring these things forward, like I was trying to do a biotech play in 2002, you could have turned lead into gold in 2002 and you couldn't raise money. So timing is an effort in this. The competition is out there, the marketplace. There's a bunch of different factors in here. So it is not without risk, and it is not for the faint-hearted, but for some of us, that's the attraction.
All right, I think I'm gonna guess it's only 10 minutes away, so we're gonna go to the speed round. Please, everybody pass a pen. and a notebook. Yeah. I will be asking a series of questions. Please just write your answer on the board, and when you're done, show it to the audience. Just write it as big as you can such that the audience can see, okay? Everybody ready? Yeah, just write it on that page, on the first page. First question. Mining material or metal in space, are we close or far? Close or far? Just write it really big and then show to the audience when you're done. All right, show the answers. Middle, far, close.
I said far,
think.
greater than 1 AU.
Far, what is that? And close. Can I have some of the, actually, you know what? I'm gonna have Bill, because you are in this mining business, but you said far. All right, please, you explain.
You said metals, right?
Yeah.
Okay, well, we've done a lot of research on this, and we think that in the short and medium term, that the volatiles are where the money is. That extracting water and other volatiles from asteroids it's easier, it's less risky, and it's more valuable. I mean, you know, a lot of people call water the gold of space. You've heard that before, the oil of space. So, not that I think that you cannot mine metals today, but I think that the risks are higher and the cost is higher, and therefore that the people in the commercial market are going to go towards volatiles first.
Can I have Joe respond to what you wrote?
Oh, well, I said far, but I thought you meant distance to the asteroids.
All right, Ian, can you explain what you meant by middle?
Yeah, so I think it's talking about commercial scale. So I think and then there's also a definition of what near, middle, far is, but we won't go there. I think you're going to see water first, volatiles first, as Bill said, and then as that's proven out, you're going to start looking at proving the metal mining technologies, and so that's why I said middle.
All right, question number 2. How about water? Close, middle, close, far? Bruce P., you might want to flip over to the second page so we can see the answer better. Just write it real big. There's a whole notebook for you. Don't be shy. Close, 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 close. Close. Answer is unanimous. We are close to getting water. All right. All right, let's go. Question number 3. How far? Yes.
This is a game show.
How far out till somebody makes money from mined material? 5 years, 10 years, 20 years, greater than 50 years. How far out until somebody actually makes money from your mined material?
Is that a faucet?
15, 7, 6, 10. Okay, let's start with the 7. How did you pick 7?
So I guess I would just have to say that, I think, I think that if you look at the things that are coming online in the next 3 to 5 years, I think it's going to be pretty amazing that how different the things are going to look in 2025 than they did back in 2010. So I just think that it's a good time. Plus, I'm one of the world's great optimists, and that's why I'm not rich. But yeah, I do think it's gonna. I think that the pace of progress is going to speed up exponentially, and that we're going to see a lot of progress in the next 5 to 7 years.
But you are the world's greatest optimist, but Bill is even more optimistic than you are because he says 6. Bill.
Well, I already committed to this to our board of directors, and the chairman is in the audience, so that's my answer.
All right, next question. Question number 4, I think. Next question. So we've been talking about water, material, metal. How about data? How about if there is such thing as mining data from space, would that be a commodity? Yes or no? Yes, 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 yes. And then there's a really long answer right here. Bandwidth.
Bandwidth
Please
is-
do explain.
I mean, I think bandwidth certainly is a first commodity before the standardization of the data. And that gets us the ability to have a railroad for the data, at least some standards for interplanetary communication. So let's get the bandwidth, and the data hopefully will standardize as well.
Excellent. Anybody want to comment?
Yeah, I took a little different interpretation of the question. I think, is data on resources in space valuable? And I think the answer is absolutely yes. You look at, as an analogy, you look at the terrestrial mining industry, and you absolutely have value in even very early data that's taken on potential resources and that are under the ground. So I think absolutely yes, that will apply to space also.
I totally agree with him, and I think perhaps that's going to be one of the first products from asteroids. And it could even be intellectual property. I mean, it could be very important to determine what asteroids are worth, to determine if you could determine somehow that an asteroid has a very valuable asset and it's easily extracted versus, because it's expensive and it's time consuming. It might take 2 years to go to the asteroid and come back. And if you pick the wrong one, it's very expensive. So I think the data could be critical.
So there's another market out here for this data. So I'm a member of the NASA Lunar Exploration and Analysis Group Commercial Advisory Board. So this is a NASA chartered organization that's mostly focused on science, but they set up this commercial advisory board because we kind of convinced them that, hey, there's a real synergy between what the entrepreneurs want and what the scientists want, because they both want data. They want it for different reasons. So there's a resources aspect to this, but the one where the initial money might come from is from the science side. So we had a meeting last week at the Lunar and Planetary Institute in Houston, and one of the things that came up was this idea that NASA has within its regulatory authority the ability to purchase data. And so rather than building and owning and operating the spacecraft themselves, what if they just bought data from the commercial providers, and then the commercial provider can use it for their commercial things, and the science guys can use it for their scientific things. So there's another potential market.
Thank you very much. Next question. I'm going to ask a slightly different question. Let's see. I understand that the Congress just passed a legislation that a U.S. company who extracted space material owns the material, right? And a lot of other countries are also following suit. What do you guys think about, if a company goes and gets space junk or gets satellites, should they also have the right to own that space junk or satellites?
Hell yeah.
No cheating.
Belong to the country.
The company who actually went and got it. All right, there's a very long answer here. All right, why did I ask this question? All right, we're going to start with the yes asterisk.
I think that what you'll find is that over time that will become a thing, that there will be companies that are taking junk out of space, defunct satellites and space junk and so forth. But it has an asterisk because obviously with government satellites and satellites from other countries, there's going to be some very interesting regulatory issues. But if you look at maritime law, and that's what the Asteroid Act was based on. I mean, we're allowed to. You can fish in international waters. You don't own the waters, you own the fish you catch. And that's what the Asteroid Act was actually based on. And in maritime law, you do salvage vessels and own them. So there's a precedence for it.
I think just along those same lines, though, looking at the maritime law, there are such things as salvage rights, and I guess you could make the argument that, is it really international waters or not? If it's somebody's spacecraft, they could make the claim that, it's their country is there, so then you have to get salvage rights or something. It's an interesting question, but I think it's not a yes/no answer.
Yeah.
Yeah, and I just kind of go along with that. This is a really thorny thing in international law, because right now there is no right of salvage in space. that if you're the launching country, one, you own it forever, and two, you're responsible for it forever. So if anything happens to it, you're that. So I think this could happen, but you would need, if it wasn't your country, and even then, you might get into some things with whoever launched that, you would need their permission to do this. So I think it could happen. I think it needs to happen. But right now, technically, if you go and you touch another country's assets in space, it could be considered an act of war.
And I think we have, one example of a defunct satellite from India being repurposed. So the insurance company owned the defunct satellite and was able to sell it. So, some parts of the ambiguity under the maritime law example get sorted out in the commercial relationships in insurance.
And there have been geocomsats that have been transferred into ownership, right? But from an international law standpoint, not a lawyer, from an international law standpoint, I think that the launching state still holds responsibility, even with commercial transfer of ownership. So there's still some issues that have to be worked out in the international context there.
Ian, can we see your answer? Because your answer was really long.
Yeah. So my answer was, did they get permission? So it goes back to what we're talking about in the last few remarks here.
You ask them if you can go and get it, and if they say yes, you can go and get it. If you get it, it's yours. Then it's yours.
Or you approach the state of registry, state of launching, and say, I'm doing this.
Or you may come up with a deal where you split it with them or something like that. There's some kind of revenue share here.
Yeah. But the idea of just going up and grabbing it without having some conversations beforehand could be problematic in a number of different contexts.
Okay. The next question is, how much time do we have? Forever. I'm going to take it as forever. I can go on. I read this, and you guys can humor me and let me know what you think. I read this, one guy who said, asteroid mining, technology-wise, we're there. It's the psychological that we can't pass. The whole entire aspect of, asteroid mining is crazy. Do you think it's really psychological, or there are some technology challenges?
Yes means
Psychological or technological? What's the biggest barrier to asteroid mining? Tech, oh my God, economics. Tech, economics. All right, so Bruce and Ian, please, economics, please do tell.
So again, it comes back to what's it going to cost you and what can you make out of it. I mean, if a government wanted to go do this, they could do it just because they wanted to do it. But if you again want to do this privately, and NASA does have OSIRIS-REx, they're going to go out and do a sample return mission. Going to take them a while, but they're going to go do that. But again, this is for scientific purposes. This is not for economics. So to me, the whole thing here, just to put in a plug, we put out a NASA research announcement on economics of space, and there's a guy named Joel Cecil down in Southern California who won last year. He's done an interesting study on how to optically mine asteroids for volatiles, doing that. And so he was at the ISDC last month and gave a paper on this. So there's some really interesting ideas of some people that have come up with some novel kind of relatively low cost ways to do this kind of thing. But again, it comes back to what's the market for the commodity once you harvest it. I think if we could close that gap and really say, okay, this is what much it's going to cost me. Here's somebody that's willing to buy it at this price. I can show that I can make a profit at that. That's when you can go raise some money to go to town.
Yeah, don't have too much to add to that. Who are the customers? Are they ready when you're ready? Is there a substitute good that's going to come out of nowhere and not be something you had in your business plan? So I think it's all economic questions.
And I think it's both. I think if you have the right technology, then the economics work, and if you don't, they don't. So just like is it a technology problem if you want to mine coal? right? If it's 100 miles below the ground, then it's a technology problem, but it's also an economics problem because you can't afford to get it out. So I think it's both.
All right, this is going to be the last speed round question. Then if we have time, then we'll go to Q&A. All right. Who do you think is going to colonize Mars first? You can write NASA, China, Elon Musk, Jeff Bezos, Lisa Kuo. It's all good. Martians, Luxembourg, no clue. Musk, industry group. Okay, I would like to start with Martians.
So would I. Well, they're just very shy. They'll come out, you'll see.
All right, Joe.
Oh, so I said Luxembourg only because I think it's going to be people or an organization that just has the vision and is really bold about doing big things. So I think we heard today about one such organization. So something like that.
Bruce?
Just contrarian in me, what you could do is you could definitely see somebody, coming out of left field that's going to come in and scoop everybody on this thing. And I'm just saying, so I'm certain that somebody's going to do it. I think it's going to be sooner than we all think, but I have no clue who that's going to be.
I just don't want to underestimate Elon Musk. I mean, he might do it with funding from Luxembourg, but it'll be Elon Musk.
He might partner with Martians.
And I just don't think he's doing it alone. So.
All right, so I guess we'll open up the floor for Q&A. Anybody? Microphone? Oh.
Hello, my name is Donald Robertson. While Constellation was still in plan, I thought one of the most likely routes to getting resources back from the moon would be backhaul from missions going to supply a lunar base. It looks like there won't be a lunar base anytime soon, but is backhaul, that's the way a lot of transportation got established on Earth. Does that make sense in space?
Well, I mean, resources, if I understood your question correctly, if you're comparing resources from the moon to resources from asteroids, for instance, I mean, asteroids require far less energy to go out to an asteroid and back than it does to land on the moon, extract materials, and get out of the moon's gravity well as well. It's about 5 times the amount of fuel to do lunar, get volatiles from the moon versus getting volatiles from an asteroid. So if I understood your question correctly, that's asteroids are much less energetic to get to and back.
But I think if I understood what you were getting at, that if you had a moon base and you were going to be shipping stuff back anyway, could you just bring resources back with you? Is that what the question was?
Yes, it was.
Yeah, I mean, if you got the lunar base and you've got a regular supply thing that you're doing anyway, it's just like with the COTS program now. NASA pays provides half of the cargo to the ISS to commercial kinds of things, just as they're going anyway, and so they offer that up to help stimulate the environment, the economy. And so I think something similar could happen if you had a base, whether you had it on an asteroid, whether you had it anytime you're going regularly back and forth. That definitely helps with the resource extraction. And the comment was made about the railroads. One of the things that was established for was to make it easy for people to travel back and forth, but also to move resources.
Okay, go ahead.
Hi, Jim Caravalla, Off-World. So, having spent the last decade trying to establish a lunar supply chain for polar water resources, one of the things we focused on was the presence of markets. And there are always going to be potential markets that we can hit. The challenge is, can we identify the customers And can we identify and get at those customers within a net present value that the infrastructure cost to set up? And the lesson that we learned after basically a decade was, however hopeful we might be, however expectant that we might be that the markets and the presence of potential markets are enough to close the investor gap, the real challenge is that we're in a bit of a hype curve. And what we have to do is identify customers. So when Bruce and others spoke about economics, the economics is the key driver. The technologies are there, they will iterate, they will always evolve, and we'll always get better at that. But the technologies are more or less there to do whatever we want technologically right now. It may be inefficient, we can always improve it. Technology is not the issue. It's identifying the customers and having the confidence that we can really get that done. And to that end, some industry leaders and other players in the banking and commodities sector already forming spacefutures.exchange commodities institution to solve this problem and address this, as we discussed with Bruce as well, to address this issue of how you close that market chain and connect those customers together.
So, yeah, Jim, you were in the same room at Steve Jurvetson's in October with Bruce and me and some others where I put this forward as a proposal in October a year or so ago. And I think it's not just a question of the visualization of the demand curve, which is what a commodities market will help us do. It's all the things that the panel's been talking about. What are the standards for defining what is a commodity? What are codependent commodities? How would you make a market in two, make it easier to do that than just one or the other? This is why I think it's so important to have the dialogue with those who are planning missions to look at the manifest, which is why I showed you the roadmaps. How are the manifests for these missions similar so that we can start to have the shopping list that overlaps? And I'd love to hear where the industry you refer to is in putting this together. I get calls from time to time, and then they go away. But I'd be very pleased to hear whether this is a finance-driven or a space industry-driven effort.
Right, and I think the key important thing is it's both sides together. And that's why I think what ULA is doing, leading the Cislunar 1000 community and other communities coming together to try and close this supply chain and the value chain of what we're trying to do in space, so that we can all fill that piece of the puzzle, as Bruce was leading to in talking about trying to fill niches. I think it's important that at the supply side, we close that supply gap, and in the value chain demand side, we identify the customers and really work to meet those customers' needs and to sell to those customers. So I think it is a complex problem, and it's not a single solve tech or solve economy problem, but we've really got to work together as a community to really close that value chain out.
And to emphasize your point, when this exchange or a few exchanges form, because we have multiple exchanges possible here, you're going to have a huge amount of capital behind the contracts that trade as commodities on the exchange for the regulators to feel confident that the commodity contract is as safe as it can be performed to be. And given the technical risk, so you're going to have to deal with the technology risk for that amount of capital to be a reasonable amount to operate the exchange.
So tomorrow we're going to be talking about this AIAA summit that was held down in Southern California last September. And it was a really interesting kind of a discussion. But But one of the ideas that came out of that might be appropriate for this is, just as we have a strategic petroleum reserve here on Earth to help stabilize prices and things like that, one of the ideas that came up was this idea of a strategic propellant reserve in space to help, prime this pump, if you'll pardon the pun, for space resources and things like that. So if the government could step in, or any government, I think Luxembourg could actually do this if they wanted to say, we will buy this amount of propellant in this location at this price. Kind of like what ULA is doing, but on a bigger scale. I think that could be a step in the right direction. The other one that I think is a really neat tool here is prizes, because then you don't have to pay for good tries, you only have to pay for results. So if you had a prize for extracting these resources or doing something like that, I'm also kind of a big fan of prizes.
I like the idea of an exchange better than prizes, just from the standpoint of an exchange allows multiple companies to win.
Yeah.
Where if I've watched what's happened with the Lunar Prize, and it's problematic if there's only one winner. You don't really know whether you're going to get money at the end. Where if I know I'm going to deliver water, even if it's a month behind planetary resources, I'm still going to get paid. Right. So I think there's some advantages to that in this particular scenario.
Yep. Yep.
Okay, I'm guessing we're done with time. All right, thank you all the panelists for the really nice reflections.
Thank you, Lisa, and all the panelists, of course. I have to apologize. We did go a little bit over because we started late after lunch. We are going to have a networking break now, sponsored by the Aerospace Corporation, so please go grab some coffee, get a snack, stretch your legs. We'll be reconvening around 3:45. Thanks.